own systems and my own rules for trading. As a trader, we have different avenues of trading. We have avenues of trading from forex to currency to derivative markets to cash and equity to index trading, you name it, and we have lots of avenues. Also at the same time, we have different time frames that we can trade. A trader who is into intraday trading could be looking at a 5-minute chart or a 15-minute chart, a smaller time frame. But a positional trader may look at not less than an hourly chart or not less than a daily chart that he may be looking at. A swing trader may be looking at a daily chart and a weekly chart to capture larger swings. So we have to understand our own personality, our own aim, what we are wanting to do in the market, what is my aim to trade, and accordingly we need to devise a system for ourselves. Something that works for me may not work for you, something that works for you may not work for me, because each individual is a different trader. He has a different mindset, and we all need to align our systems with our mindset, with our personalities, and derive our own systems. At the same time, we can take help of various stalwarts from this industry and derive and understand as to what exactly different indicators, what exactly different tools people are using, the eminent traders who are there in the market, and how do they trade the markets. So a guideline definitely is a big help and will help you to design a system for yourself. So I'll give you an example of how did I start trading actually. So it should be always with baby steps. So as a little baby, or when we see toddlers playing around in a play area and they are learning to ride a bicycle. So initially at the small age, when they are about 2.5, we introduce them to tricycles. So initially we push them and we nudge them that how to pedal the cycle and how to take around, how to turn the cycle. So small ways we are guiding the little child as to how to ride a tricycle. Eventually, as the child matures, as he grows up, he starts moving on to a bicycle with the support wheels. Once he moves on and starts learning to ride little independently, the mother coaxes him to remove those support wheels and ride the bicycle on his own. Here, the mother may be running behind him, catching him, and eventually she will at one point in time let go the child, and the child will slowly start to learn how to ride a bicycle by himself. He is going to fall down numerous number of times. He is going to rise. We have to encourage him to rise. Get up, come on, you need to take your next ride up and carry on with your cycling and get a grip over this skill. And once he learns this skill, let me tell you that the child is never ever going to forget riding a bicycle in his life. Such is the journey of a trader as well. As a trader, he learns, he opens various books. There is so much material available online also these days. So he Googles, he tries to understand what all systems are available in the market, what all platforms are available, how to utilize all this available knowledge, and how to derive his own system, how to balance. Just as a cyclist, how he balances, and eventually he learns to eventually he learns to ride the bicycle. That's the same way the child is the adult who is trying to learn trading. He is going to experiment, he is going to find various systems, and eventually he is going to fine tune the right tools according to his personality, according to his mindset, according to the resources available to him. The resources will involve the time that he can dedicate to the markets, the money that he has got to allocate into the trades, and so on and so forth. All kinds of platforms which are available. There are free tools available, there are paid platforms available. So what is it that is going to carve that niche and help you become a scalper or a good trader is what is most important. So just like the cyclist eventually finds his own balance, same way a trader is going to find his own balance and start to trade by himself after the whole process of understanding, learning, relearning, doing, undoing, and he strikes the balance and eventually derives his own system. So as we discussed about various resources which are available to the trader, the first and foremost resource is time that he can dedicate to market. According to the trading systems that he uses and that he wants to implement for trading, one of the most used trading system is a scalping trading system. So what exactly is scalping? In scalping, one would find that that person will take baby steps, in the sense just the way a trader would make small profits. At the same time, since the profits are small, he tries to increase the volumes once his system and the rules are derived, and after the volumes fill in, so those small profits amount and cumulatively become big profits in the long run. That is one thing. Secondly, in scalping, a person has to be very quick. So it is a fast profit booking system. So one has to take a trade, he has to be at the screen quickly. When the indicator gives you the signal, he has to execute his trade, put his stop loss immediately in the system, and book his profit at the right trading risk and reward that he has decided. Now for a scalper, the usual risk reward is around 1:1. So what does 1:1 risk reward mean? That means that if I am taking a risk of 5 points, my rewards will be also 5 points. If I'm taking a risk of 2 points, my reward is also 2 points. So it is one part, your risk and reward are equal. There is, after your trade starts working in your favor and you decide to take half profit at 1:1 risk reward, the second step which you escalate yourself or upgrade yourself will be 1:2 risk reward, wherein your risk will be one part and your reward will be double of that. That means if you're taking 5 points as risk, your reward will be 10 points. So managing your position is the most important thing that a scalper needs to understand. The amount of equity that you are going to buy, or derivatives lots that you are going to buy, is very important to understand the risk reward. Thirdly, what is important is fast profit booking. So for fast profit booking, you need to have your exit strategies properly aligned. Unless your exit is planned, you will not be able to book profits and enjoy the rewards of this particular trading system. So as a scalper, we need the trend and the momentum to be in our favor. That is the first important thing which we need for scalping equity. And the second important thing that we need to do, what we need to adhere, is discipline. Now there are two types of scalpers. There is a primary scalper and there is a supplementary scalper. So what does a primary scalper mean? A primary scalper is a scalper who would only use scalping as a method of taking profits. A supplementary scalper is a scalper who would derive profits from scalping other than his other trading bets which he has, which may be someone like me who has a rule-based system which is not less than an hourly chart. So in that case, I will not even go to a smaller time frame like a 5-minute or a 10-minute or a 15-minute chart. For me, when I'm trading positionally, I just need to have my system aligned on on an hourly chart and a daily chart. In that case, smaller time frames do not matter to me at all. But in such a situation, for me as a supplementary scalper, once I take a trade, I just don't have anything to do because my trade is going to run for a long period of time, maybe 3 days, 4 days, 5 days, and sometimes if a market is really trending, maybe even for months the trade will go on. So what will I do during such a trending phase? During such a trending phase, I can utilize the scalping system to make small money during the day. And as they say in English also, that drop makes a ocean. So drop by drop, if so many drops collect through the intraday scalping method, eventually the kitty or the profits that you are making would run into good amount which takes care of your expenses and which takes care of your needs. You need to have strict exit strategies that if my risk to reward has been met today at this particular trade level, I'm exiting the trade irrespective whether the market still continues in my favor or goes double fold from where I have exited. So there should not be any sulking, there should not be any remorse feeling as a trader, because you have achieved your goal which you wanted to for the risk reward of 1:1 as a scalper through the day. Secondly, most important thing as a beginner for scalping is, in the beginning, a scalper would usually try to stick to long trades. That is a psychology, or he feels safer, or as a layman, a person does not even know that we can short markets, that you can make money shorting the markets. For anybody on the streets, they know that you buy at X price and you sell at X plus 2 price. So for a layman, long concept is already very clear to them. So it is easier for them to learn the concept of scalping in the initial phase. Later on, as you progress, as you gain grip over your system, as you start sticking to your rules, that's when you can also progress into shorting the markets and making money in the short trades as well. A successful scalper needs to have higher rate of winning compared to the losing trades. That is for one of the most important qualities as a scalper we must have. Secondly, important is discipline. Thirdly, important is the exit strategies. Fourthly, quick execution of your trades is most important. The beauty of the scalping system is, or most of the scalping systems which are intraday basis, can be automated. So the algos can also work with the rules that we have. They are set into the system and the trades are fired as per the rules when they are met. So it is easier for a scalper. Life is, as a trader, is now evolving and making it much simpler than the earlier days when you had to be glued to the markets and to the screen. So now you have automated signals which can come in with the help of buzzers or some alerts that your particular price level for entry has been triggered. So you can come to the chart, you can see your trigger price which has come, and execute your trade. So eventually, with technological advances, the scalping system is also improving and making it less time consuming, or the screen time is slowly reducing for scalpers too. But yes, you need to do your homework. There is no shortcut to winnings. So a day prior, or once the market shut down, you need to understand the trend of that particular equity. What is that equity doing? Simple concepts like Dow theory, or simple concepts like looking at the higher time frames of the chart will give you an insight as to what the trend of that particular stock is. And once you know the trend of the stock, it is easier to gather, or it is easier to capture the scalping moves in the intraday basis. Intraday trades, and hence we want to make small profits, but keeping our profits to the maximum. A scalper, the ability of a scalper should be such that he makes more number of winning trades than the losing trades, and that is what going to help him make money in the long run. Let's look at some pros and cons of scalping. As a scalper, scalping can be very profitable if it is executed precisely and sticking to your rules. Secondly, you do not need to know fundamentals. Thirdly, very little market risk is involved because you are looking at trading that instrument for a very short period of time. Fourthly, it is a non-directional strategy. Fifthly, it can be automated. Now, some of the cons of scalping are, it is time consuming. You need to spend that time on the screen. Secondly, high level of concentration. You need to be very precise when you are scalping. And thirdly, the frequency of trading is is going to be higher, because you need to make more number of trades, because you are making profits, smaller profits. So the number of trades that you will take would be a little more than the usual traders which trade on the basis of positional or swing trading. So these are the pros and the cons of scalping. So that's all about the pros and the cons of this scalping system. We have talked about the discipline that a scalper needs to do. We have talked about that we need to have rules and strategies for it. So next we move on to the strategies for trading, and what the strategy is going to be all about, what tools we are using for this intraday scalping system is what I'll explain to you next. Alright, so for the strategy, we will be using Donchin channel and we'll be using Chikou. So what is Chikou? Chikou is a component from the Ichimoku, and Ichimoku is a typical tool that was developed by the Japanese. Chikou is one of the 5 components, and Chikou tells you about the momentum in the particular trade. So when the Chikou is above the prices, the momentum is bullish. When the Chikou is below the prices, the momentum is bearish. What exactly is Chikou? Chikou is the current price of that particular instrument plotted 26 periods behind. So when we are looking at the chart, I will try and explain to you how the Chikou looks and how it appears on the chart. The next important thing that, or the tool that we are using for this scalping system is Donchin channel. So Sir Richard Donchin, in the year 1920s, he was a very famous trader. He has evolved from ashes to riches, and at one point in time he had lost all his capital in trading, and eventually he developed a system for himself. He worked really hard, and eventually he arrived and developed a system which was suitable to him for a weekly time frame. He is in fact one of the person who has started fund management like what we have today, like the PMS and all these kinds of fund managements that we have. He is one of the father for all this kind of trading, fund trading and the mutual funds that we have. He is the father for trading these kinds of managing these funds. Now Richard Donchin introduced this particular trading style on a weekly basis, but we as scalpers will be using this particular system on a shorter time frame, which is 15 minutes time frame. Now in his system he has developed 3 bands. There is a upper band, there is a mid band, and there is a lower band. The typical setting of this Donchin channel would be 20. So what he means by period of 20 is, he is looking at the 20 candles over the time frame that you're watching. So if you're watching a 15 minutes time frame, you're looking at 20 15 minutes candles. If you're looking at hourly time frame, you're looking at 20 hourly candles. If you're looking at weekly time frame, you're looking at 20 weeks candle. Alright, the highest high in that particular period will mark the upper band, and the lowest low in that 20 periods will mark the lower band. The average of the upper and the lower band is depicted with the mid band. Let's look at how the Donchin channel looks on a slide. Let's have a look at how Donchin channel looks. So this is the upper band that I was talking about, and if you look at these candles, these are 20 candles that is denoted out here, and the low of the lowest low in that entire band will be marked with the lower band. The upper end of the entire 20 period, the highest high, will be marked with the upper band, and the mid band would be the average of the high and the low band. So this is how the Donchin channel looks. Can you imagine if now once the time period goes on moving ahead and we have the next candle which is getting marked. Supposedly, if the candle gets marked above this particular high of the Donchin channel, what would be expected from the Donchin channel is the Donchin channel will start tilting upwards. downwards. At the same time, if a new low gets marked from this previous swing low, which is out here, then the lower Donchian channel will start tilting downwards. It is very important for us to understand how the Donchian channel will move with the price action. So a rising upper band is what we see, will give us an indication that the price action is bullish. You can interpret it as a bullish price action. A falling lower band, we can interpret it as the bearish price action. A falling upper band would be a semi-bearish action, and a rising lower band will be semi-bullish interpretation. At the same time, when the Donchian channel are flat, that means the price action is neutral. There is no new low or no new high which is marked from the previous 20 period of time. Now, when you see that the Donchian channel are flat, that indicates that the price is trading within a range. The interpretation we can do is, it is a neutral price action that we have. At the same time, when both the price bands, both the Donchian channel band, the upper band and the lower band, both of them are rising, it can be interpreted as a bullish sign. When both the bands are falling, it can be interpreted as a bearish sign. At the same time, when the Donchian channels narrow, they squeeze, we can say that there is low volatility, and when they open widely, we can say it's a high volatility period. So once you know the direction of the Donchian channel band, whether it is rising, whether it is falling, whether it is flat, we know what is the expected move which is coming in the market. Means if 20 period upper band is rising, the upper band, that means that the 20 period high is getting higher. When the lower band is falling, that means the low is getting broken and there is a new low getting formed from the past 20 periods. Now we will be using a 15 minutes chart out here. Let's look at how the chart setting would be. So if this is a Hindalco 60-minute time frame. Of course, for scalping, we are not using a 60-minute time frame. We are using a 15 minutes time frame for scalping. This slide is just to help you understand how to interpret the trend which is there in that particular script using the Donchian channels. So here you can see the green band is the upper band. You can see that it is falling. It is making lower highs, and you can see the red band, which is the lower band of Donchian channel, making lower lows. So the bands are falling, giving us a interpretation that the trend is bearish. Any pullbacks to the upper band or the mid band and a reversal candle that you can see would be the selling opportunities. Next, what we need to understand is the squeeze in the Donchian channel. So the squeeze in the Donchian channel can be seen here, wherein the Donchian channel come very close to each other, and immediately after the squeeze, you will see the widening which is happening, because market usually goes in phases. There will be a low volatility phase and there will be a high volatility phase. They will be alternating each other, and hence it is very important to know when you want to take a trade, when the markets are squeezing, when the Donchian channel are squeezing, and you can expect the next volatile move to come in the markets after the squeeze has happened. So usually during squeeze, you will find the bands going flat and then they come very close to each other, and then they expand and a volatile move which comes in market. So a very good indication that we get from the direction of the Donchian channel and the width of the Donchian channel. This is another example of rising bands. So here you can see that the upper band is making higher highs and the lower band is making higher lows. So here what you can see is where the Donchian channel has squeezed, after that there will be a volatile period. It's very important that we understand where the squeeze is coming and where the widening phase is coming. So currently this is the SRF chart where we can see, and this is a weekly chart of SRF. So the width is so far, so we understand that the bands are wide. That means it is a very volatile script at this point in time. As a scalper, we do not want to trade into very volatile script, because that will give a huge move against you or in your favor in just few minutes of time. So in the learning phase of scalping, it is very important for you to understand, interpret the trend, and then eventually trade in the direction of the trend of the higher time frames, so that you reduce your risk in the market, and you are trading when your trade in the lower time frame is in sync with the trade in the higher time frame, then it will be more rewarding and the risk involved will be very less. So during the initial learning phase, definitely all these learning curves like the narrow bands, rising band, wide band are going to give you some input as to what the script exactly is doing at that point in time. Now let's look at the chart settings. The chart settings will involve Japanese candlesticks, and the time frame that we are looking at is 15 minutes time frame. The indicators that we will use majorly are the two indicators that we talked about, that is Donjin channel and the Chikou. I hope now you can relate why did I take up this extensive understanding of the Donjin channel and the explanation of what Chikou is all about, so that we can derive our trading system. And it is very important for us to understand the tools that we are using, because unless you understand the tools deeply, unless you understand what the upper band and the lower band of Donjin channel are doing, unless you know what they are talking to you, what they are telling you, that what the trend is going to be, without knowing that, you will not be able to catch the right momentum in the market. The trend is going to be interpreted using the Donjin channel, and the momentum is going to be interpreted using the Chikou. So the Donjin channel are rising or Donjin channel are falling. Are the Donjin channel wide or the Donjin channel narrow? This is a comprehensive study which you need to do regarding Donjin channel to understand the trend. Chikou, is it above the price or Chikou is below the price? We need to understand, so that if it is above the price and you are taking a long trade, that means the Chikou is in your favor, because Chikou is above the price, it is free and it is going to give momentum to your trade, to your long setup. If you're looking for a short setup, you should look at Chikou below the price, because you want the prices to fall. In such a situation, you want Chikou to be in favor, or it should not have a hindrance, it should not have the price wall obstructing it. You want the Chikou to fall freely, so that a momentum is achieved in that particular trade. As a scalper, we need to be friendly with two things: trend and momentum. If these two are properly analyzed before the market opens for the particular script, it helps you to pick the right trade with the objective trading system that I'm going to talk about next. Let's look at the rules for long and short trade setups. First, let's discuss the long trade setups. So as we said, we want for long trades, we want the Chikou to be above the price. So the first rule is Chikou above the price. Second rule is, usually what I have seen is this system comes very handy, especially when the stock opens about 0.5 or 0.75% or 1% up, and what happens is we said, "Arey yaar, ye to bhag gaya. I've not got the entry in this particular stock because it is already 1% up." No, but that 1% up can still go 1.5%. You can still make 2% out of it. So this system comes handy at such a point in time when the price or the particular stock opens 0.75 points up or 1% up from the previous day's closing. The third thing is, we need the prices when the particular stock opens, that particular candle of 15 minutes needs to go and touch the upper Donjin channel. So when it touches the upper Donjin channel, and next candle we have the entry candle. So this particular candle which goes and touches the upper Donchian channel is your signal candle that your long trade can get triggered. So the entry would be when the candle would break the high of the signal candle. So say if the first candle, of course we will look at certain examples which will make it easier for you to understand. Imagine the first candle opening into a wide bullish candle. The next candle opens to be a small candle and it breaks the high of this first 15-minute candle. That is your entry. Your stop loss will be 2 points below the mid band of the Donchian channel. What our expectation from this particular trade setup is, first the Chicago is above the price. So we are expecting that there would be further bullish momentum in that particular stock coming in. Second, the expectation from this chart is, since it is touching the upper band of the Donchian channel, the next candle which opens up and makes a higher high than the signal candle, the Donchian channel is going to flex upward and going to go into a trending phase. So we know that a rising Donchian channel is a signal that it is further bullish. So we are catching the trend and the momentum together at the same time. The trailing stop loss would be just below your mid band, 2 points below the mid band, and you will book the trade at 1:1 risk reward. So this is about the long setup. Let's look at how the short setup would be. For short setup, we want momentum to be on our side. So we want the Chicago to be below the price. That's your first rule. The second rule is the first candle similarly opens lower and goes and touches the lower Donchian channel. Maybe the stock corrects and starts correcting or pulling back by say 0.75% or 1% that the stock is down, and it goes and sticks to the lower Donchian channel. So that is your signal candle for short. Your entry would be the following candle which breaks the low of the signal candle. The stop loss would be again mid band, 2 points above the mid band, and the risk and reward is again going to be 1:1. So once your 1:1 risk reward is achieved, you will exit the strategy. As we have discussed, scalping, it is very important that you exit the strategies at your risk reward, keeping your risk reward in mind. And second most important thing is discipline. So entry candle, exit candles, all these rules should be fixed in your mind that okay, Donchian channel is making lower lows. That means the trend is falling. I will get a bearish entry in that particular stock when the first signal candle starts breaking down and gives you a follow through sell signal. So very important for us to stick to our rules. As we said, plan your trade and trade your plan. It's very important for a scalper, and to make profit consistently in this particular scalping system, it is very much possible, but only with set rules and set discipline. Alright, so let's look at some long setup. For long setup, we have two tools that we are using in this particular setup. One is the Chicago and the second is the Donchian channel. Now if you look at, this is a 15 minutes chart that we are looking at, as we discussed that we look at 15 minutes chart. Secondly, we want the Chicago to be above the price. So you can see the Chicago is above the price, indicating that there is a bullish signal which is coming in for a particular setup. Bosch on the 8th of March, you can see this is a slide of 8th of March, opened almost like with a big bullish candle. The bullish candle went and touched the upper Donchian channel. So you can see the upper Donchian channel started flexing up. So what we are looking at here in the Bosch chart is we have a bullish opening in Bosch, and you can see the upper Donchian channel started flexing upwards. The movement of the Donchian channel up indicates that the high of the past 20 candles has been broken by the first candle here formed in Bosch in the first 15 minutes of the trading day. So that is your signal candle which goes and touches the Donchian channel. This is my signal candle. Followingly, in the second candle, it starts breaking the high of that signal candle, which is your entry candle. So your entry candle is the second candle. My stop loss here would be below the mid band, a little 2 or 3 points below the mid band. This is how a long setup typically would look like. The upper band is rising and the prices have started making a new high, new 20 period high, here being the 15 minutes candle. So last 20-15 minutes candle से ये high ऊपर बना है and now we start getting a trending indication. The trend is on our side, the momentum is also on our side because this is a long setup that we are looking at. What happens next through the day? This is that candle of Bosch. If you see, the move continued upward and the trend continued upward in the upward direction throughout the day and gave an enormously huge trade in Bosch. Not a single candle even came down to the mid band. It was a nice trending day and a good long trade could be captured. Let's look at another example. This is an example of Bajaj Finance. This is a short setup example. Now here you can see the Donchian channel squeezing and coming very close to each other. This squeeze was the first indication that after a squeeze, as we discussed, there would be a widening phase. Even here earlier also you can see a squeeze happened and a widening phase. A squeeze happening and then a widening phase ensued. The Chicago slipped below the price. So when we are looking at the short setup, we want two things to happen. One, the Chicago below price, that is going to give the momentum, and the next signal would be from a candle which starts touching the Donchian channel. So here, though this first candle touched the Donchian channel, the following candles did not break the low of this candle. So the signal did not get triggered until the next candle which went and touched the Donchian channel lower band. Now this lower band, if you see, started pointing downwards, indicating that this low which has got printed is lower than the past 20 candles on the 15-minute chart. The next candle which broke the low was your signal candle, and then the trend continued in the downward direction. The stop loss here would be just above the mid band, and let's see how the trade culminated. The entire trade kept on sweeping downwards. The entry which we got around the levels of 59.80 corrected for 40 points on the downward direction, wherein we got the momentum because the Chicago was just below the prices. Another important thing we can observe here is when the Chicago was just trying to break below the prices, the signal did not appear because the prices went up, and then the signal came around when the Chicago actually broke the price wall and started scaling downwards. So a nice 40-45 points trade could be captured in Bajaj Finance short using the short setup. Let's look at few more examples. This is an example of Reliance. It is an example of 6th of March. You can see the Donchian channels were flat earlier. The opening candle opened and touched directly to the upper band of the Donchian channel. There was a squeeze, that means out here, wherein there is a flat Donchian channel. Then the Chicago slipped above the price, so bringing in a bullish momentum again. The prices started breaking the high of the candle, the signal candle, which appeared right in the morning, first 15 minutes, and then the trend kept on going up. The prices kept on sticking to the upper band, indicating that new highs kept on printing in Reliance chart. The stop loss, of course, was at the mid band, and the prices never came down to the mid band. Of course, the risk reward is 1:1. So when our risk reward is met, we are supposed to exit the trade setup. Another example of short trade. This is an example of Maruti 15-minute chart, and the example is of 9th of March. You can see a squeeze in the Donchian channel happening. What happened after the squeeze? Prices dropped to the lower band of the Donchian channel. So this particular candle that you can see went and touched the lower band. At the same time, Chicago took hindrance at the price wall. It got obstructed at the price wall, and the Chicago started sliding below. This was your signal candle that the trade is ready, but actually the entry happened only here, because after that the prices moved up and they did not break the low of this candle. Followingly, this candle touched the Donchian channel and the following candle broke the low, and the short trade got executed at the levels of around 86.30 and kept on sliding for good 50-60 points on the downward, where the prices kept on sticking to the Donchian channel lower band, indicating that the Donchian channel is also falling. So the trend was bearish and our trade setup also was bearish. So we were having least risk to reward in this particular trade, as you are trading in the direction of the trend. So as we discussed that trading in the direction of the trend is very helpful because it helps you to minimize your risk. This is an example of a trade setup of Hind Petro. On the 10th of March, if you see, there was a squeeze in the Donchian channel and the Chicago, which was already above the price. So Chicago being above the price is my first indication that the trend is bullish. A squeeze and the Chicago being above the price. So I was waiting that the prices go and stick to the upper band and then get a follow through signal. What happened was, it did completely opposite. The prices went and dropped to the lower band. So obviously the trade setup was not yet active because Chicago was above the price. We want the Chicago to be below the price if the prices are going and sticking to the lower end of the Donchian channel. So eventually I waited for almost an hour, and after about 45 minutes I got a signal, because each candle is of 15 minutes. This is the third candle which gave a signal that the prices are now sticking to the upper band. The upper band is also rising and the Chicago is above the price. The entry was, this was the entry candle, this was a signal candle, this was the entry candle followingly, and the trailing stop loss was kept at moving at the mid band, and 1:1 risk reward was achieved in this particular trade setup. We had some rules. We had the rule of Chicago and Donchian. We had the rule of trend and momentum in our favor, and that's how we stuck to the rule and we executed the trade as per the rules. So frame your rules, frame your system, make rules for longs, make rules for short. If you are a beginner, you can just start with long trade setup and you can understand and slowly build up on the long trade setup and then move to the short trade setup. So trend, momentum, Donchian channel, Chicago, a combination of this on the 15-minute chart and a trending day was in the favor. Also at this point in time, you can keep in hindsight what the markets are doing. Are the markets into a bearish sentiment or are the markets having a bullish day today? Is Nifty trending today into a bullish domain? Is Nifty indicating a bearish day today? So if your trade setup is long, try to take a long setup on a bullish day when the indices are bullish. If your trade setup is bearish that you are looking at, then try to take that bearish setup on a bearish day when the indices are into the bear's grip. Such setups, when they are in sync with the overall market conditions, they work better. Another hint I can give you out here is, when you're looking at Nifty, and if Nifty is bullish today, you will try to find out bullish setups. When the Nifty is bearish today, try to find out which are bearish setup, because you are trading with the market sentiment, and that's why you are a scalper. You don't want to take positions home. As a rule, we are supposed to close the position before the end of the day. We are here to make fast money. When would you make fast money? Only when you are in sync with the market conditions. You are in sync with the chart setup. So this is one tip that I could give you to make your trade more profitable. So to summarize the whole thing, do we have a holy grail? There is no holy grail in the market. Let me tell you, after the experience of 15 years, that we don't have a holy grail. It is just about using your system optimally, sticking to the rule, being disciplined. Is Donchian channel a holy grail? No, it can fail. It can go against you. But as a trader, we know where our risk and rewards are. We have a set rule that defines our system, that defines our entry, that defines our exit. And as I gave you the example of a movie hall, we are not going to get trapped in a particular trade because we use stop losses. Stop losses are your biggest friend. Let me tell you, as a trader, forget scalping, forget any kind of trade time that you trade into. Maybe it positional, maybe it be a swing trade. Stop loss is a trader's friend. So make friends with stop loss. You should always know where your exit door lies and where you need to exit your trade. As a scalper, what we need to do is we need to have more winning trades than the losing trades. So even in trading, we observe that, as a positional trader also, we observe that it's not going to be more number of trades which are going to be very effectively beating your PNL system, PNL on the Excel sheet, but it is definitely going to be